All right, so we're doing this first Ask Asher live. I'm excited. Hey Brad, thanks for joining us today for the very first Ask Asher.
Hello there.
How you doing, Brad?
Good. How are you?
Doing well, thank you. So we'll give it a couple more moments to let people come on, and then we're going to get right to it because we already have a list of questions that we've received, and then anyone that's on today is going to hopefully have the opportunity to ask a question and then we can get to the bottom of it. And today is really surrounding the topic more around buyers, right? How to win in today's market where some people out there feel like there is no winning if you're a buyer, seller, investor, or renter. And we have seen buyers winning in today's market on multiple levels. So we wanted to make sure we're bringing that to everyone's awareness. So as people are coming on here, we'll most likely start in the next minute and a half with our first question as people are coming on and watching on the live stream on Facebook. And we will be recording this and we will be putting it out there. So you can take notes or you can just enjoy the ride and we'll get you all the high level items later. Craig, thanks for being on today.
For sure. How you doing?
Good. How are you?
Good. Thought I'd hop on and see what's happening.
I appreciate it. Yeah, very first Ask Asher here. And as you know, Craig, being in the, just the north west, right? It doesn't
Yeah,
matter if you're in Arizona, if you're in Washington, Oregon, California, New York on the East Coast, people have questions and we're bringing the forefront to it live, which is fun. So we're gonna have some good times with this.
absolutely.
Yeah. And again, today's main mission is to help buyers understand how to win in today's market without overpaying or settling. And those are the two things that I think most buyers are most concerned about. They're concerned, hey, if I'm going to buy today, am I buying at the time where it's going to continue appreciating, or in a year from now, or in some other, time frame, am I going to be losing? Am I going to be underwater, right? So that's a frequently asked feeling and question that we get. And then they don't want to settle, and we don't want them to settle. We want buyers to feel like they're making the right move for themselves and their families to move forward with whatever that looks like. And we want to address these things. All right, we're 12:05, so I'm going to start with one of the first questions here, okay? Um, Is it really possible to avoid overpaying in Phoenix and the Valley markets, right? So is it really possible to avoid it? And 100% yes, it is possible. Now, overpaying could sometimes be relative. It could be relative to someone's budget, right? If someone's budget is telling them that they can't exceed a certain down payment amount, if their monthly payment amount, right, that would be an overpayment. But I think where the maybe the kind of the epicenter, like where that came from, is again, people are worried about buying that home for let's say $800,000, and next week or next year it's only worth 700. And there's no way for any of us to really know if that is a thing or not. That could happen, but I think that if you look at the history of real estate and we look at and see what values were a long time ago, let's call it 40, 50 years ago versus 10 years ago versus a couple of years ago, we're seeing a natural progression of appreciation. Now, are there highs and plateaus and dips? 100% that's going to happen. And I think that for every buyer out there that has this feeling and question, it's important for them to understand that the neighborhood, the community, the type of property, where that property is located within a community, is it backing to something that might um, not allow the mass of buyers to want that property, right? So, what are the features of that property? So, when helping a buyer out, if they love a home, they're going to buy it. But I think the advice that we can give them is, hey, if you call me in 5 to 10 years from now and you want to sell it, these are the things that could come up based on today's buying trends that could possibly hurt you. And that's a really big piece of what we do and that every agent should do for every buyer out there. But historically, values appreciate over time. And as you're living in them, or if you're buying a property to rent out as an investment, again, every month that mortgage payment is reducing the amount owed, and overall, the appreciation factor is there. Again, no guarantee. A lot of disclaimers today, especially if it's live, but that is traditionally what it looks like. From that question and anyone on today, anything around that they want to go deeper with, or should we move to the next question? And this is more of a communal effort. It's not a lecture series. So I want to hear from everyone that's on today, which means if you are going to say something, just reminder to unmute.
I'll just chime in. I think that, appreciation's there. Like you said, there's the roller coasters that are hitting, and like mortgage rates where they are right now, for example, are not at 3%. They're not at 2.75 that we were seeing a couple years ago. But I keep hearing this over and over in the market, like, you marry the home right now and not the mortgage. And I think with where rates are right now, it's a hell of a good time to buy because once we do see a dip, um, history tells us that prices are going to go up because demand's going to be there. So I think overall, like you're saying there, like there is a constant, whether there's a roller coaster of values or whatnot, you know, the overall of the last 20, 30 years, what have you, you're going to see an increase in your investment. And sure, you might buy something right now and have a little higher payment, but you get in there now, and hopefully they're saying rates are going to be back in the fives by the end of this year. If that happens, sweet, and you marry the house and not the mortgage. So I'll start off with that.
Okay, I appreciate that.
You
And
bet.
again, it's making sure that it is possible to not overpay. That's the main message, right? So if someone's out there and they're thinking of making a move and they want to maybe buy, there are ways that we can show you historically where the home's value has been, where it is right now. But it really just comes down to the comparables right now, right? If we can find similar homes in that neighborhood that are the same type of condition of the home that you're interested in, and we can just show you the facts. Sometimes there's outliers where homes sell for a lot more or a lot less than the average of that type of property. We see that all the time. So it's really important to not focus too much on the outlier, where if let's say one home sold for 600, but the majority of homes are selling for the high sixes or low sevens, there's probably a story around that. And it could be it was a transaction amongst friends type of situation or family, or there could have been something really wrong with that property that needed to be taken care of. And they reduced the price down for that buyer to alleviate that. And we've seen that with major, let's say, foundational issues where most buyers wouldn't want to buy that property because of that, but someone was okay with it at the right price. Okay. Number two is, do I need to waive inspection or appraisal to win a bid? And we've seen that a lot in the 2020, 2021, and the beginning of 2022 era. Right now, we are mid 2025. We have seen a couple of those, but it is not really in today's cards for you needing to waive an inspection or appraisal. It could come up in those, again, those outliers. There are properties that are receiving multiple offers, but it is very rare. The majority of the time right now, you will have the full capability of having both of those contingencies when you're financing a new home in that deal. So again, when you're financing, you're going to have that appraisal contingency. When you're paying cash, you're not. When you're buying a home with cash or financing, you're going to have your inspection process. In Arizona, it's defaulted to 10 days. It could go shorter if you don't need as much time or if you want to negotiate that, and you could extend it if the need is there. Okay. Homes that are sometimes in the northern region of Arizona, Prescott, Flagstaff, for example, they might need a little bit more time just because of the availability of inspectors and inspection companies. So that's something to take note of. But everything else, you are getting an inspection. You're able to negotiate when something of major concern is has arisen, and to see where it goes. Okay. Anything else on number two from anyone on that? Okay. Because I know we have a couple lenders on today. So when it comes to appraisals, right now we're seeing them come in at value. But again, there's sometimes those outliers that throw things off. And we have to make sure that we're communicating what we can with those appraisers to make sure they understand maybe how many offers came in or didn't come in during that time period. Number three, should I include an escalation clause in my offer? And you know what? Most buyers don't even know what an escalation clause is. Matter of fact, most agents don't even know what an escalation clause is. So let's dissect that and unpack it. An escalation clause is like this. If you're offering on a home, let's say you're offering going back to that $800,000 price point. You're offering $800,000 on that home and you really want it. And you heard possibly that there's another offer coming in. What can you do to make sure you're not overpaying, right? Because you're willing to do more, but only if you have to. So that's where the escalation clause comes into effect. And it works like this. You're going to offer your 800,000 and you're going to state in there that you're willing to pay up to maybe it's 825,000 in increments of let's say 3,000 or $5,000 above the other offer that comes in. Now, the thing of protection for you as a buyer is in order for the escalation clause to be utilized by the seller, they have to provide the other offer, right? We get to see that other offer to make sure that it's really a better offer because it's not only the price of the home that is being offered on, there could be concessions as a part of that deal that might not be as good for the seller. So we look at what the net is to make sure if it's a really qualified offer. And that's something that we write in to the contract. So how it goes is you'll put your offer in at 800. Let's say the other party offered at 805. That escalation clause will kick in if it's just based on a clean deal of those price points. And let's say you said you'll offer $5,000 more than the highest offer. So now you're at 810. And let's say the other person doesn't come up at all anymore. It'll override right to 810 and you can win the deal. And all along you were willing to pay 825, but you didn't have to. So it's really hedging and making sure you're not, overpaying in that situation. Was that helpful? Did that make sense to everybody? Thumbs up,
Sure. Yeah.
side down. Is that helpful? Okay.
Question. Are you
Yeah.
seeing, but are you seeing that much these days? I'm just curious if like
We've
post.
seen that once since this year, and
Okay.
we just saw it once. Yeah. So it's not, again, it's not a common thing, but I think the majority of consumers in today's market feel that it's a buyer's market. The buyer gets to dictate what's going on. And some sellers still feel like it's a seller's market because it was a seller's market for so long that they feel like they get to dictate everything. So we're seeing a really like a clash of opinions, right? Well, I'm the seller and I get to dictate this. And the buyer says, well, no, it's a buyer's market. Where have you been? And a buyer's market versus a seller's market is sometimes not dependent on the overall market, but it's dependent on that home in that community. So we have to be cognizant of that, right? And that's why we look at days on market. We look to see if they've reduced the price at all. We look to see if they're offering any incentives, right? All of these are metrics that we're looking at to form the best strategy for you as a buyer. All right, number four here is how critical is a pre-approval or all cash offer? So getting pre-qualified or pre-approved is a must in any market, buyer market, seller market, neutral market. Um, all cash in almost every market will usually win depending on the price and the other deal points. Because we've seen and we've actually represented buyers that were not cash, they were financing, and we got them the home even though there were cash offers. And part of that is the communication that the agent needs to have with that other agent to make sure that they know that our client is qualified, they're ready to go, right? They're not going to nickel and dime during all the inspection stuff. They know that this home is the right fit for that buyer, right? So part of that is the communication and the rapport building. But ultimately, when it's just two offers sitting right next to each other and they could be off a little bit, where the finance deal could be a little bit more than the cash offer, typically the cash offer will win. Because when it's a cash offer, there's less contingencies, less things that can go wrong for the seller, which provides more confidence in that seller. So that seller is going to say, okay, well, once we get through inspection, we're pretty much golden here. Versus a financed offer, even though it's pre approved, things could change in the life of that buyer. And we've seen it. Right. One example is what happens if that buyer loses their job during the escrow, right? They're protected with the financing contingency up until 3 days before close of escrow. So if something were to happen like that, that buyer is able to cancel with a loan denial. Let's say the seller has already moved out, they've packed up, they're waiting to put the final touches on this deal, and something like that happens, that buyer is able to get out of that deal and get their earnest money back and then start over once they get their new job. Again, all cash, it's solid. The money's there, it's sitting there, it's ready to go. And what we did see a lot of in the more of a seller's market is people were able to do all cash and they were also able to do financing. And sometimes they chose the all cash to win the deal. And then they refinance with a cash out refi after they got the property, right? Because then they knew that being an all cash buyer put them in a better, light to the seller. All right. Anything more on number four? Any additional questions that arise from 1 through 4 so far? Okay. Are seller concessions and rate buy downs worth asking for? 100%. I would say that seller concessions, which can be used to, let's take a step back. What is a seller concession? It is when you get a credit from the seller to the buyer. It could be $5,000, it could be $30,000, right? Depending on the price point of the home and what financing you're getting, okay? And how much you're putting down. So there are limitations, but essentially what it is it's a credit from the seller to the buyer that can go towards the buyer's closing costs. The buyer can utilize it to buy down their interest rate. And right there, that has been one of the biggest things of continuing to keep a lot of the deals moving forward in this time period when buyers feel like the interest rates are really high. It's not why all the deals are going through, but this has been a key player of why some buyers feel more confident going into the marketplace because they know that at the end of the day, the price of the home is a factor, but the biggest factor is always come down to the monthly payment. And if that monthly payment is something that they can budget for and they can afford without, buying too much home or becoming house poor, then that is what kept people in the game. So with those seller credits, the buyer has the opportunity to use that credit to work with their lender to buy down the interest rate. And there's two main ways to buy it down. You can permanently buy it down, which usually costs more money. So using more of those seller concessions. Or the second way is a non-permanent, right? So it's something that you'll have maybe for 2 years or 3 years, right? It's a temporary buy down. And then at the end of that term, when it was lower, it'll go to the adjusted amount of when it was when you were qualified for that amount, right? And that's a whole nother segment and a whole nother webinar in itself. So at the end of the day, are seller concessions and rate buy downs worth asking for? Yes, because that's what has kept our market moving in a positive direction, and that's where buyers feel more comfortable. Bottom line, they're able to afford it. Mel and Caitlin, I'm just wondering if you're on the Facebook Live, if there were any questions on there, because I know that we have about 8 more minutes in our session right now.
Yeah, let me look real quick. I didn't see, I just see a couple people watching, but
Okay.
no questions so far, doesn't look like.
Okay. And I have some other, things to share with these last few minutes here, but essentially
Mhm.
today is about getting the facts out there to buyers and helping them understand if they're worried about where the market is. Again, no crystal ball. I don't know where the values are going to be next year, but what can we do to position ourselves properly to make sure we're not making a mistake? That's really what it is. No one wants to make a mistake. No one wants to feel like people felt in 2008 and 9, right? And I know that feels like a long time ago, but people still feel it.
Mm.
And that's what we're trying to avoid, right? We're trying to avoid what people went through before, and these are the things that we do. Like guidelines for lending have changed, right? So there's a lot of things, not just on the real estate side, but on the lending side that have changed as well to make sure that doesn't happen. Can we guarantee anything? No, right? So a couple things here, right? So what's going on, and this is from Keeping Current Matters. This is amazing information, right? So the number of homes for sale is rising in many markets. So this is a national level news, and it does go along with Arizona very nicely. So what does that mean? There's more volume, there's more homes available, there's more options for buyers, which means sellers need to be more critical about how they put their home on the market and particularly how they price their home on the market, right? So again, giving shoppers more choices than they've had in years because there were times where we did a search for a buyer and there were maybe 5 options, right? It was crazy, right? And now there's, let's say, 20 options. Now, the volume increase isn't out of control. Like back in 2011, 2012, it was, I would say, pretty close to where we are today, right? So it's not out of control where there's too many things on the market, but there are more choices now, and it's all relative to the last few years. Okay. So sellers are becoming more flexible on pricing. And what that means is that the seller should be more open to the conversation around what they're asking for, but also when an offer comes in, they need to be a little bit more, flexible on that. But again, there have been times where when you price something not over market, leaving enough buffer, or even at the market, knowing that that's what it should sell for, but putting it right below, right? Putting that list price right below because that's the type of market we're in. So I'm not saying that to put it less than what your home is worth because ultimately your home is worth whatever a buyer is willing to pay. So back to buyers, if the buyer is willing to pay $800,000 for that home and there's multiple offers on it, that doesn't mean that you underpriced your home. That just means that you have a fantastic home and the buyers, which is the market, will drive the price to where it should be. So in that situation, they might not get seller concessions because there are multiple offers. So that seller's gonna, get the most they can regardless of, what type of offer they take. But ultimately, if you are negotiating properly and you're reading the comps properly, you're going to get what your home is worth and you're going to save more and make more by not overpricing it. Even though that feels wrong to most sellers, right? Most sellers feel like if I price it too low, they're just going to come in lower. Possibly, but the trend is if it's on the market long enough and you get enough showings, the writing's on the wall, that is what it's worth with enough people through that door. So in the case of there was one showing and they got one offer and they took it right away without letting enough people in to experience that property, then yeah, that maybe they did sell it for too low. But if there's enough people through the door and you get enough feedback, that's what it's about. So here, the silver lining is that the market is starting to rebalance, right? This could create opportunities for buyers who are prepared. A prepared buyer is someone that understands their current situation financially. They're pre-approved or they have their cash ready to go, and they're not starting the process after they start shopping. Shopping should come after the strategy has been talked about. They're financially ready. And when you have those things in line, then your clarity is so much more in line with what you should be doing. Because if you let the emotion ride versus having the logic ride, then you might end up in the wrong spot, right? And that's a big key takeaway right now, right? If you start shopping before getting all your ducks in a row, then that's just emotional and sexy and fun, and you're envisioning yourself in this home. But if you didn't make sure that you can afford it first, then this is going to be a long journey, a long ride, right? And we've all experienced that. I think everyone on this call today has experienced that themselves, or that someone that they know that has started off on the wrong foot. Like they started on the wrong step. There is a certain process that you really want to go down, and it doesn't matter if it's your first time buying a home or it's your 10th. There are just things that you should do before others in order to make sure you're making the right decisions.
Great info. Thank you.
You got it. You got it. This was fun. And I think
Yeah.
that everyone that's on, or everyone that's watching on Facebook Live, and everyone that's watching after it's live, thank you for watching. I appreciate your time being on here. It does mean a lot. And again, the goal is to create that impact for ourselves, to be better in the field of real estate, but also to make sure we're informing the consumers out there of what's really happening versus maybe their neighbor or their friend telling them what they think. Sometimes it could be right, sometimes it could be real wrong. And I don't have all the answers, but I have resources to get some answers. And we've gone through enough transactions to have a pretty good feel of what's happening. And we study the market often as a team. So, again, we don't know everything, but we know where to look and where to maybe get some other answers that we might not know.
Yeah, sure.
Yeah, Brad.
I just finished a coaching call with Tommy Choi, and I think one of the things right now is important to try to diffuse buyer fear, and really you need to call out to the veterans, the practitioners in our industry that worked through the housing crash, to realize that nothing right now is anywhere close to those conditions. And one of the examples that he brought up that was great idea is that this is just an inventory driven, slowdown that where we're only going to have to think like short term with regards to how much value, could be turbulent, right? Because in other markets in this country, they are still, Chicago's on fire right now. There's a 2 month supply. Okay, so nothing that is occurring is like it was before, where for 5 to 10 years the mortgage industry had been doing garbage. People have no idea. One of the stats that I heard the other day was last year, keep in mind, in Maricopa County, we had 238 foreclosures. Last year. Do you know how many we had in 2009? 116,000 or 112,000.
There we
So
go.
if you didn't live through that, it's important for us, I think, to verbalize that, to say, this is nothing. And we just like have too high a level of cancellations because of what you said earlier, is there's too much of a detachment where the buyer's market, sellers are still thinking, I thought this was still a seller's market. Guess we need the dust to settle on that, maybe a little movement in rates to really help everything. But in my opinion, based on the amount of equity in the homes in this country, I think the average equity in a home is like over 300,000. 40% of the homes are free and clear in this country.
Mm-hmm.
That there should be no fear whatsoever of repeating what happened.
But that's the point, right? People think that not that's going to happen again, but they don't want to make the wrong move. And um I remember, go back to 2011 where when you did a search for someone, like the inventory, you did a search, you might see one or two homes that are what we call just like a normal sale, right? Because there's different types of status of homes, right? Like on market, off market, but then there's different types of sales, right? So there's a normal sale where someone's selling their home, maybe they owe 200 on it, they're selling it for 500, there you go. But the majority of those homes on the market back then were either short sale or foreclosure,
Right.
right? That was just the norm, what was normal then. And the normal sale now is now just a normal sale. Are there still short sales and foreclosures? Like you mentioned, it's like historically low. It could happen, but those are very situational, right? Depending on what happened to that person and over leveraging. But yeah, that I think that's a big key takeaway that you mentioned. The fear is people thinking that it went in a different direction. The market is going in a different direction than it might be, and ultimately everyone needs a home to live in, and we want to make sure we're all making the right decisions, right? Every consumer out there wants to make sure they're buying right. And like today, we talked about all the ways to make sure we do that. So, again, we're over by a couple minutes, but I appreciate everyone that's on here. Just be on the lookout for the next one. We'll probably do this on a monthly level, different topics, but all relevant to what's currently happening in the marketplace because that's what people want. Again, thank you for everyone that's here.
Thanks, Asher.
Thanks.
Thank you.
You got it.